Good morning and good afternoon and good evening to all of you from around the world. And I want to welcome you to our first ever central banking conference, Central Banking in the Age of COVID-19. We have 7 central bank bankers represented here today over the course of 7 hours. And we're going to work our way around the world. We're starting in Hong Kong. We're at 7 p.m. We're going to work our way to Europe, hit Basel, Frankfurt, and London, then move to the Western Hemisphere, to New York, and then to Mexico City and Santiago, Chile. So we're essentially spinning the globe today, talking to the leading thought leaders in terms of central banking, not only just with respect to monetary aggregates, but how they see broader macro conditions and also emerging technology and other issues such as climate change and sustainable finance. So we're going to kick it off 7 a.m. New York time, 7 p.m. Hong Kong time, with our good friends from HKMA. I was just on the phone earlier with Howard Lee, who's stepping in today, is representing HKMA, and I was just saying how much I miss visiting Hong Kong. It's one of my favorite cities, and I must say HKMA has the best view of any central bank anywhere in the world. I like being up on your top floor. You can see the expanse of the city, and you can see commerce. It's capitalism right there in front of you, seeing all the shipping and the ports. It really is a remarkable vision or view of how the global economy and supply chains work. So with that, let me get us started and welcome my good friend Howard Lee from HKMA with us today. Howard, thank you for taking the time. It's 7 p.m. I hope I'm not keeping you too late today, but maybe we could just get started and you can give me a sense of how you see the outlook from your perspective. We had some fairly positive news out of China just a few hours ago. You've got your own monetary aggregates out also just a few hours ago. How do you see the global economy? How do you see the Asia Pacific region? And are there some green shoots out there from your vantage point on the top floor of the building?
Okay, thank you very much, Tim, for having me here. I really appreciate this opportunity to talk to you and a lot of friends of the IIF. As you said, now is 7 p.m. We have a very good view, actually, just outside the window. Here, we are seeing some beautiful sunset. I would have turned the camera, if not live, for you to see it. But coming back to the topic of the discussion today, perhaps I give a little bit of a brief overview about the COVID situation, very briefly, because that's the whole theme of the conversation is about. Now, you haven't heard too much about Hong Kong in terms of the COVID sort of scenario in the last few months, partly because we are basically keeping the virus under control in Hong Kong. Altogether, we have some 1,200 confirmed cases in Hong Kong, a big part of it coming from returning Hong Kong people from elsewhere. So in terms of a local transmission, local contraction, we are suppressing it to basically just 1 or 2 every couple of weeks. So this is an encouraging situation. In terms of the economy, a big part of our economy has resumed to normal. Offices are sort of running as usual, although some financial institutions still have some split office arrangement for better business continuity. But for the general economy, like restaurant, they are fully open and they are actually quite packed, and it's quite difficult to get a table at good restaurant these days. And parks are open, and so people are going out and shopping malls and everything. But while we are putting sort of the situation under control, also thanks to different efforts of a lot of people, in particular, the local community, in the sense that because of the SARS situation in 2003, everybody is very conscious about the importance of wearing face masks and also social distancing and cleaning hands. So these measures were practiced pretty early in the spread of the pandemic. That's why we were able to put under control the situation pretty early without a complete lockdown of the economic activities. But still, some segment of the community is still pretty hard hit, like the hospitality industry, like the travel industry, hotel, and also for those related to supporting school children, because a lot of them are sort of the schools are closed. That's why our response measures have been geared towards providing support to a lot of these industry to make sure that they preserve their jobs, will not lead to permanent unemployment, and also help industry preserve their business and tiding over their liquidity issues. So we have been working together with banks and the government in providing with all these measures, and I believe a lot of these measures are also used in many different jurisdictions. Our hope is that the economy will return to the strong footing as quickly as possible, so as to enable these businesses to really regain the revenue. But something which is more uncertain is the external environment, because of the pretty unsynchronized recovery in different places, and some countries are still seeing a lot of lockdowns. So any external relationship, external trade and transaction are still very much affected. So this is something that we hope will change for the better before long.
But we are beginning to see, and thank you, Howard, that's very good to know, and congratulations on the success on social distancing and the appropriate protocols. We're struggling with that a bit in certain parts of the United States, which is leading to some retraction in the way in which we're trying to normalize. But in terms of just being the early indicators of a global recovery, even though you noted it's not synchronized, we are seeing better data out of China, the news today on PMIs. Are you seeing trade flows picking up? Are you seeing activity not only just in HKMA or Hong Kong, but the Asia Pacific region?
Well, in terms of trade flows, if you talk about China, actually even in April, we saw that on the ground, very strong recovery of a lot of the manufacturing activity in the mainland. I talked to some people in Hong Kong, say, for example, a property developer, they had to stop all the construction in Hong Kong, not because of sort of a concern about infection on the construction site, but because of the lack of raw material or semi-finished parts from the mainland. But they told me that just when the mainland sort of removed the lockdown, in 2 weeks' time, their suppliers actually ramp up the capacity pretty quickly to maybe 60, 70, 80%. So that sort of the pace of recovery was pretty good in selected sector. And I was also told that in the mainland, in the Labor Day, 1st of May, the kind of travel, local travel was also pretty popular, and some hotels were very well booked. In terms of other areas, I think it really depends. Like in some places like Vietnam, I have read figures that they have not really suffered too much, and we just saw the GDP figure, the very mild sort of change. So that also really depends on individual jurisdiction. In Hong Kong, on a year-on-year basis, we're still seeing a lot of sort of contraction, so to speak. Not just because of the COVID, but as you might be aware, we sort of underwent a bit of a recession since June last year because social unrest, because of geopolitical tension. So this is something that we are still going through. But so far as Hong Kong is concerned, I'm hoping that just looking at the sort of numbers on a year-on-year basis, by Q3, we probably would be a little bit better, at least not as bad because of the base effect, because we suffered the most drop starting from Q3 last year.
Indeed, I saw the Vietnam numbers this morning. In fact, the Bloomberg headline was that maybe it's the only country that's will have superior growth this year. So it tells you something about potential shifting of supply chains, but something about maybe the region will be the true leader for the rest of the economy. Over the last decade, you and other central bankers around the world have been perfecting the art of the stress test. So we've just gone through and are still experiencing maybe the greatest stress test of our lives. What have you learned from this experience? Is it different than what you expected? Obviously, the nature is different, but did the systems adhere to the kind of stress you put them through? Was there lessons that you learned from it, surprises you didn't think about?
Okay. Now, if you talk about stress test, I think in the financial system in Hong Kong went through really hyper stress test in the last 12 months for the events that I mentioned earlier. But luckily, we managed to survive and also it's still kicking. Now, I think what you asked me, what are the surprises and what are the lessons learned? For this COVID-19 thing, to me personally, my surprise is the speed and extent of the spread of the virus and the kind of impact on the economy around the world. I think this is really unseen in a generation, this kind of a widespread impact on so many countries around the world, virtually all countries, all jurisdictions around the world. And also the response from central banks, the government, and also the financial industries have been unprecedented in terms of the extent, in terms of the depth and breadth of the response. These are really something amazing. Now, one lesson that I learned, perhaps more than one lesson, is a few lessons that I perhaps would like to share is, first is when we deal with this situation where we need to make judgment call as to what action we are going to take. But in this crisis situation, we need to be quick. And sometimes we need to lean on the safe side in deciding whether we take some action or we wait a little bit more for the full event to unfold, because sometimes waiting can lead to rapid deterioration of the situation, especially if we are seeing industry facing very rapid decline in revenue and facing very severe liquidity squeeze. Another point is we really need to build up the buffer, the capacity in sunny days. Now, in Hong Kong, we are lucky to have a pretty robust banking system. Our capital adequacy ratio on average is 20%. Liquidity coverage ratio is 160%. Now, we had to build up these when the situation was favorable, because if we come into a crisis and then start to think about what sort of a defense we can build up, is usually too late. So we have to sort of save for the rainy days. This is another point that we believe is very important. In the Asia Pacific region, I see that after the Asian financial crisis, we see that a lot of economies, a lot of jurisdictions are actually practicing a lot of these. That's why during this crisis, we see a lot of Asian Pacific economies coming into it in quite a bit of better position in terms of like a fiscal position, external position, balance of payment, and sort of exchange rate sort of for FX mismatch kind of situation. So this is another important lesson that I myself believe that I would have to remember. And so let's see, going forward, there are more work to do, and we hope that we would be able to continue to keep the economy going and then seeing the recovery pretty soon.
You mentioned, used the word buffers, and obviously in the post-financial crisis environment, jurisdictions and globally, we've seen counter-cyclical buffers put in place, capital buffers, liquidity buffers. to be used exactly in this kind of environment. Although we've seen many of our institutions reluctant to use those buffers because of the stigma associated with it, that the rating agencies or investors might view it negatively, much like going to the discount window in the US has been traditionally seen as the negative stigma. Are you seeing a reluctance to use the countercyclical buffers that are available to institutions out of fear or concern about the stigma associated with it?
Now, if you ask specifically about the countercyclical buffer, I would say no, in the sense that because even if I don't release the countercyclical buffer, the kind of capital position of banks in Hong Kong is very good, like what I described, is 20%. So they are nowhere near the regulatory minimum, but the stance that we send out, we demonstrate by releasing the countercyclical buffer will provide added comfort to banks to sort of continue to sort of extend credits where it's needed. So for that, I don't see it. But you rightly mentioned one point about the discount window. We also saw this situation. We actually, sometime last year, that's actually part of the resolution planning process that has been in place for 3-4 years. As part of this process, last year, we revamped our liquidity support facility, so including the discount window in our case. We introduced additional tiers of liquidity support for banks under different environments. Like what you described, we see a lot of reluctance of banks trying to use these facilities because of the stigma issue. So how we try to solve it is we communicate with banks, we issue written communication, ask them to use it. For foreign banks with branches or subsidiary in Hong Kong, we even communicated with their headquarters. Now we are pushing banks to conduct trials to make sure that they have the internal processes and also authorization process to use these facilities. Because very often we talk to one group of people like the treasury guys that you can tap our facility, but they said that no, I can't use it because every time I tap your facility, we need to make a report to the headquarters, and also perhaps some even said that they need to seek personal approval from the CEO, and they would sort of ask a lot of questions. So we sort of handhold them and make sure that they have the internal processes, and also go through some trials so that through the whole sort of a command line, everybody is aware that these are the situation where they should tap our facility instead of continue to sort of spook the market by bidding sort of unreasonably high for funding. So these are the things that we have been doing to help address this kind of a stigma issue.
The other side of that coin, Howard, is volatile capital flows and volatile markets. You know, we saw in March a historic outflow of both fixed income and equity flows out of emerging markets generally. Some of that, actually, I think 2/3 of that, we've seen a retrenchment, a return of those flows. So enormous volatility. But the HKMA in Hong Kong appears to have been quite resilient given these massive flows and the need for dollars. Obviously, the Fed reinstituted their swap lines. There's a repo mechanism out of the New York Fed. So how did you do it? What's your secret sauce for dealing with and creating such a resilient system given the massive amount of volatility and capital flows sloshing around the world?
Right. Now, you're exactly right in the sense that very often in this kind of situation, the knee-jerk reaction is capital sort of outflow from emerging market economy. Now, one thing that helped a lot is the action by the Fed and other central banks in providing liquidity to really flood the market so that money can sort of retrace back in the very short time. So far as Hong Kong is concerned, we are faced with the triple whammies of also the kind of social unrest and also talks about sort of different national security laws in Hong Kong and also Sino-US tension. So there have been a lot of talks about sort of anxious investor. Now, one thing that's very important is communication. Because very often now people might not get the complete picture of an economy, especially international investors, who might not be able to really come very close to the situation on the ground, and they just watch maybe international TVs and looking at scenes and looking at reports of individual experts and commentators about a situation, and they might choose just to de-risk very rapidly before they have time to really find out exactly what's going on. So we have been reaching out to different stakeholders very proactively whenever there are sort of misunderstandings about the situation in Hong Kong. There have been more than one occasions that there were rumors that Hong Kong dollar is going to depeg from the US dollar, or even there would be capital control in Hong Kong. So we reach out very proactively to different stakeholders to tell them that capital flow is guaranteed under the basic law in Hong Kong, and the peg is going to be there to stay, and explain the reason why we have the ability to defend the peg, given the very strong fiscal reserve position and the exchange reserve position that we have, which is more than double the size of our monetary base. When we communicate with others, we have to communicate with facts, not assertion or opinion. This is very important because when rumors are flying around, and when it goes to trust as to whether I should believe the authority, I should believe in an expert from the private sector, is important to present the facts on a consistent basis, so that any reasonable person can see from themselves why we are having confidence, why our system is resilient. I think these are very important points to really present to our interlocutors.
You know, Howard, you're one important node in a global system, especially a system for the flow of dollars. And so two questions. One is, how would you rate international cooperation in this crisis? And two, are the kind of swap lines that the Fed has put back in place, is that a permanent fixture? I know the staff at the Fed hates it. I know the leadership of the Fed understands it is now a necessity and probably a fixture. But how do you see it from your perspective, both international cooperation and the kind of swap lines that are in place?
Well, I would say that international cooperation in the last few months have been phenomenal. In terms of coordination, in terms of communication, we have really very close contact with all the major central banks, and sometimes weekly big meetings, and also a lot of bilateral meetings on issues of common concern. As we can see, of course, dollar funding is an all-important issue in the financial world, and the Fed is in the central position to make sure that this dollar funding situation would remain sort of a smooth throughout these disruptions. So the Fed has been very proactive, and the Fed also, I understand, have their own sort of a process to go through for some facilities, and they went through that pretty quickly and in very collaborative manner so far as we are concerned. So these facilities, although the kind of US dollar tender funding tender facility that we operate was not used a lot, but the fact that these facilities are pretty widely available in many jurisdictions around the world, in different funding centers around the world, provide the market with very strong signal that everyone, I mean all the major central banks, are pulling all stops to really make the market work and going smoothly again. I think this kind of a confidence is important. I saw very strong collaboration and cooperation among central banks in this regard in the last few months.
I agree. We'll be talking to Augustine Carstens later today at the BIS, and I know the BIS annual meeting is going on. So this, I know, is a topic of conversation. However, we're starting to get a few questions, and I urge our viewers to send in your questions. And the first one is about central bank digital currencies, which is a nice way to transfer and transition into the digital agenda. HKMA specifically in Hong Kong generally have been a real leader in technology, innovation, fintech. In fact, the last couple of times I've visited with you guys, most of our conversation has been about the application of new technology or faster payment systems. So maybe we just start with the question itself. Might this crisis accelerate the process of digitization generally and movement to a central bank digital currency specifically?
Okay, that's a very good question, because this COVID thing, I believe, is going to precipitate a lot of structural changes in many different sectors, some positively, some perhaps negatively. One winner definitely is technology sector, and likewise fintech. Generally speaking, I believe this COVID pandemic, apart from sort of like us using a lot more video conference, would sort of lead to a lot more electronic transactions, which traditionally might be more face-to-face. And also the people's mindset and reception of this kind of a new way of payment would continue to increase after this. You mentioned our faster payment system, which is our sort of retail RTGS system. We introduced it about 20 months ago. Counting from the beginning of this year, January this year, to April, we witnessed a growth of 60% in usage, partly because a lot of people go online and go to electronic payment rather than face-to-face payment. So this is a very rapid development. Now, mind you, this is notwithstanding the fact that economic activities have slowed down in the same period, but we are seeing a surge in usage of electronic means of payment. So this is something that we believe will continue to develop in the months and years ahead. And also another interesting anecdote is that, I don't know whether you are aware, we also have a kind of like the paycheck scheme in the United States, like the government hand out $10,000 per Hong Kong adult resident. But because of privacy reason, we require people to register for this handout. Now, we did that 8 years ago in 2012. At that time, only 20% of residents register through the electronic means. Others insist to go to a bank and sign up a form. So you imagine how tedious the process was. But this time around, we are in the middle of it. We are seeing just the other way around. Only 20% or less use paper form, and 80-something%, close to 90%, use the electronic forms. So this is also a testimony of the propensity of people to go electronic. Now, go to the central bank digital currency. Now, this is, of course, a very hot topic. Many central banks are sort of studying this issue. But mind you, I believe different central banks might approach the issues from a slightly different perspective. Some might come into this topic more as a research topic to see how digital currency will help sort of a transmission mechanism in implementing monetary policy, like how do we practice negative interest rates. But some other might look at it more from a retail payment angle. This is not the majority of central banks, but some central banks do sort of look at it from this perspective because of perhaps the culture and the adaptation of e-money in different jurisdictions. But more central banks are actually looking at this as a possibility of using this for some new application. Just like the HKMA, our focus is more on looking at how to use central bank digital currency on a sort of retail level, not retail level, wholesale level, between financial institution or between big corporates and financial institution, to solve some issue which might have some difficulty today, like cross-border payment. Now we are going through the sort of a correspondent banking channel. This is expensive and also slow sometimes. So whether the central bank digital currency can overcome some of these problems. So we are having a joint pilot project with the Bank of Thailand. We are making good progress. There are also other areas that we can explore. Just like if we have a digital currency, whether maybe some years down the road, we have other forms of digital assets, like securities. You don't need to go through a CCP. You might have a digitized, tokenized securities. And then with a digitized asset, if you have a digitized central bank digital currency, a lot of interesting things can happen, like sort of a DVP without going through any other sort of intermediaries. So these are different application scenarios that one can examine and explore. So I believe different central banks are doing this out of different consideration, and eventually perhaps some scenarios will emerge with as a more practicable and also having a business case. Then we will see more widespread application.
Great. And Howard, I just looking at your slide deck for January, outlook for 2020, trends and risks, some of your work streams. One of the work streams is accelerating fintech development. So how are you doing that? And are there examples of fintechs that have been launched that we should be looking out for?
Now, fintech is one thing I have learned in the past few years in promoting fintech is very often fintech is pretty idiosyncratic to different societies, in the sense the culture and then the habit of the different sort of societies might be different. Like in Hong Kong, we might not go all the way like we try to go for a cashless society, not that kind of fintech, because we believe we go for diversity and provide for choices for different people. And for us, what we want to do is to help banks to adopt more tech solution, to raise the level of competence of the banks, and through different means, like promoting the use of APIs, just like the open banking. And also we have also granted licenses for digital banks. We have granted altogether 8 licenses for digital banks, so that they would use different means of service delivery, because these digital banks are not allowed to have physical branches. That's why their only touch point with their customer is through the digital channel. So they would have to come up with a different idea of service delivery in order to get a foothold in the banking sector in Hong Kong. So these are things that we have continued to push, notwithstanding the COVID situation, and we are seeing some interesting application coming out, and the launches of services by different digital banks, what we call virtual banks.
You know, Howard, I've spent the last few years spending time in Silicon Valley and other technology locations, meeting with a lot of heads of small startups in the fintech space. Well, I must say, where the real interesting activity is occurring is the large global platforms, Alibaba's Ant, Tencent, and WeBank, which is actually a member of the IF, and now Libra 2.0, which is headed by Stuart Levy, former general counsel of HSBC. So, how do you think about these massive, incredibly powerful, well-funded, technologically sophisticated platforms? Is that the future of finance?
Yes and no, in the sense that in kind of a in the world of network, some people say that is the winner takes all, and then you are so dominant that you are the only power in the world. That can you can also disintermediate the bank and relegating banks to a utility. But the financial industry also builds on trust. This is very important. In the sense that I believe up to today, a lot of the incumbent banks and also financial institutions still enjoy quite a bit of trust as compared to some kind of these kind of a tech giant. It's not that they are not trustworthy or whatever, but the mode of operation, the culture has been pretty different. In the sense that one incumbent bank actually told us that they have a lot of customer information about their payment habit, about their spending pattern in the form of credit card payment and also their paycheck account, everything. But they have been very reluctant to try to mine the data and kind of provide innovative service and or monetize the data. Not that because they do not have the capacity or they do not have the sort of the will to do that, but they are very mindful that there's a trade-off between sort of using this kind of customer data versus the trust they have built with customers over the years. So whether we have a new generation which would not mind their data being used more like this, or we have a different reflection over what we saw in the past few years on the tech platform and the social media platform, to such an extent that people would think twice about migrating their whole management of finances to this platform. This is something that the jury is still out. So I would not say that it would be a must that these tech giants would totally dominate the financial market. Everyone would have to play their cards very carefully. The power of data and the sort of commanding the trust of customer, these are very important. And mind you, trust takes years to build up, but it takes only one or two incidents to really totally destroy.
Correct. Thank you, Howard. In our final few minutes, let me just shift to climate and the green agenda. You have just published a white paper entitled On Green and Sustainable Banking. I haven't looked at the paper. I just saw it up on your website this morning. You have a cross-agency steering group with the SEC. What is your plan? What is your agenda in terms of sustainability and green banking?
Okay, well, Tim, you are really up to the minute on what's happening here in Hong Kong. Really amazing. And now, I would describe it in maybe two segments. One is as a sort of banking regulator, HKMA, and also we as a sort of reserve manager, managing sort of the exchange fund, $440 billion US dollar exchange fund. Now, on the banking side, our strategy is to adopt a kind of a three-pronged approach, in the sense that you mentioned the white paper. It deals with the first leg of it, which is to kind of do a baseline study of the current situation of the banking sector in terms of the green and ESG thing. And then we publish a white paper to sort of set out how we see the situation. Going forward, we would engage the banking sector in a dialogue about sort of standard setting, sort of a target setting, and try to come up with some specific target that we hope the banking sector would achieve. And then thirdly is about implementation, enforcement, and kind of review. So this is a three-step approach. So we publish a white paper. In the next few months, we will engage with more dialogue moving into the second and third leg of it. And the other part of it is about the management of the exchange fund, the reserve. We have a sort of integrated the ESG consideration in the investment process in different ways, both for our internally managed process and also in selection of all our managers. We have to assess their ESG sort of policy. We are also doing more investment in green bonds. Also, we are starting to invest in sort of a kind of a ESG index basket of equities as well. We are sort of watching carefully because there are some issues that will still require more international collaboration, like the metrics and also the taxonomy. Right. These are things that we hope that the international community will continue to work more to provide more sort of standardization and also framework for all to follow.
Indeed, Howard, we're working very closely with the NGFS. We had the chairman of the Basel Committee on yesterday with the new Basel Committee task force. So we're right in the nexus of the topics you just mentioned: taxonomy, metrics, the data, what data is reported by whom, is the quality. The other area we're looking at, and just launched in the past few weeks with Mark Carney and his role at COP26 in the UN, is scaling up the carbon offset markets. And I would think that Hong Kong would be a real center for the development of one of those offset markets.
Yeah, we would love to sort of work together with you and also the BIS more on this to contribute more to the global development on this front.
Wonderful, Howard. Fortunately, our time is up. I was just really getting in the groove and enjoying our conversation, but it's late for you, and I know you've got places to go, and I've kept you longer than I wanted to. But thank you so much. You've been so kind, as you always are at HKMA. I've never had a bad session there. You're always so kind to me when I come visit. I really look forward to seeing you again in person. And thank you very much for spending time with me here today.
Same here. Thank you, Tim. I really enjoyed the discussion with you, and I hope the rest of your sessions would be very stimulating and exciting as well.
Great. Thank you, Howard. Take care. Bye-bye.
Bye-bye.